Hi folks, welcome to the Financial Argument. The health crisis shattered the world's economies, and the U.S. economy is going through a period of record unemployment, with deep financial crisis in almost every sector. Some sectors are the closest they've been to complete collapse since the Great Depression. With the economic situation in such a terrible state, there are many signals that a major crash has begun in the real estate market as well. The deep decline in the housing market that started last March is about to become an even bigger problem. A situation worse than what we experienced in 2008 appears to be on the horizon. There's a lot of discussion about whether or not owning real estate is an asset. I don't want to get too involved in this discussion, but I can say that if we're just talking about the house you live in, it doesn't make sense to think of it as an asset. The right question to focus on is what is happening in the housing market now. There could be many reasons why you decided to watch this video. Maybe you're wondering if it's the right time to buy or sell a house. I'll not tell you whether that's a good idea or not. However, I have a ton of information for you folks. All I can do is tell you the red flags I see, and it's up to you to make up your own minds. Before getting too deep into the latest data, I want to start with some basic information you need to know about the real estate market. Let's look at some data from the Case-Shiller Home Price Nominal Index. When we look at the index, we see a graph that shows us what started from 2.5 to 3 points in the 1890s increased to 195 points by the 2010s. Wow, it appears the housing market is a great investment. We see an almost 65 times profit in 130 years. This index you see on the screen shows more recent data. As of December 2020, it reached up to 234 points. Wow again! But this index is not seasonally adjusted and inflation adjusted. This is why it seems to have brought an enormous profit. However, there are different types of Case-Shiller indexes. According to the seasonally adjusted data here, real estate has earned its investors 75% in 100 years, from 100 points in 1890 to 175 points in 2020. When you look at it like this, it earns its investors only 0.75% per year. If we look at the price change made by gold in the same period, the profit rate of gold is 243%. In other words, gold brings 3 times more income than real estate. So why do many American people have the illusion that the real estate industry is a very good investment? Because in general, real estate prices peak about every 10 years, but there they make a significant decrease. If you look at this table, you can see how prices go up and down every 10 years. I hope you've learned about why real estate is not in my portfolio as an investment tool after I explained this. And now, here are the latest real estate housing market crash predictions for 2021. Let's go. According to the latest data from the Federal Reserve Bank of St. Louis, housing inventory in the United States is at an all-time low. Compared to last year, active listings in the market have decreased significantly. In February 2019, the housing inventory was 1,201,806. In 2020, the inventory declined to 1,018,973. And the latest data from February 2021 shows us it's at 523,244, meaning it has dropped by almost 50%. We have other data showing the new listing count in the United States has been significantly lower than the activity of previous years, with a slight uptick in January of 2021. Housing prices have increased due to the rapid decline in housing inventory in the last quarter of 2020. Thus, existing home sales, which stood at 1,550,000 at the beginning of May, despite the health crisis, dropped to an incredible 1 million in January 2021. When we look at these charts, it's crystal clear that something is really going wrong. It's obvious the housing market is not normal. So what exactly is a normal housing market supposed to look like? The National Association of Realtors, or NAR, considers a balanced housing market to have a 6-month supply, which typically means moderate price appreciation. NAR publishes their data every month. Active listings and pending sales are both included in the reported inventory. Once a property is listed for sale, it's considered inventory. The important thing to take away from this is that if inventory is rising, prices will not increase as much. As I said at the beginning of the video, we had 1,070,000 active listings on the market in December 2020, which is about a 2-month supply. Now, if you look at December 2019, there were 1,390,000 active listings, about 23% more. We haven't seen numbers this low since 1999, when NAR first began publishing these reports. Let's look at this video by Ken McElroy. He explains that you would need to add 4 months of listings to the 2 months of listings shown above in order to have a balanced market. If a 1-month supply is around 300,000 listings, you would need to add 1,200,000 properties to make it a healthy 6-month supply of 2,200,000. According to Black Knight Real Estate, there are more than 3.5 million people delinquent on their mortgages, with 2.2 million of those seriously delinquent. 1 million people are in forbearance right now, which has been extended to June 2021 by Biden and will need to be addressed then. Let's say 50% of the 3.5 million people end up in foreclosure. There would be an additional 1,750,000 houses on the market. If you combine this with the existing supply, there would be between 2.7 million and 3 million listings, which is more than the 2.2 million needed to balance the market. In short, inventory could rise, meaning prices would drop dramatically. As you can see, the situation has been distorted, and it's important to consider the underlying factors when looking at the statistics. You have foreclosures and new homes, which means more inventory and lower pressure on the market. Renters also decrease pressure on the market since they're renting rather than buying a new home. Then we have low interest rates, which means you have more people who can now afford to buy a home. This increases pressure on the market, along with more people now working from home. All of these factors are important to consider. Ken's analysis tells us to expect an increase in inventory during the second half of 2021, which will put pressure on prices. Then he says we can expect to see prices fall in the last quarter of 2021 and first quarter of 2022, with rentals picking up at the end of 2021 and 2022 after a period of being flat. Aside from everything, the real estate market is currently in an extreme bubble. With the financial crisis of 2008, this bubble burst somewhat, and there was a painful historic correction, with millions of Americans losing their homes and their jobs. After a few years, it looks like the balloon is back to inflating. Let's take a look at this news. We know that one of the bright spots coming out of all the fallout since the crisis began is the housing market. However, according to a survey conducted by LendingTree Inc., 41% of respondents believe the housing market bubble will pop and force home prices to drop. Well, it appears there are many indicators and warning signs that are not normal for the real estate market. Without a doubt, we're in the early stages of a housing market crash. This collapse that will begin in the American housing market will spread all over the world. Today, there's already a huge real estate bubble in Canada, Australia, the United Kingdom, and many countries of Europe, waiting for the domino effect to happen. Of course, nobody knows exactly when it will unfold, but the best thing to do is prepare for the worst. I see valuable subscribers leaving comments on the financial argument who are very aware of the economic reality, and many who are fully prepared. Don't forget to like and subscribe to the video to keep the YouTube algorithm alive so we can reach others who don't know what's coming. God bless you all.